On that particular example, there's $500,000 worth of long-term care insurance coverage, with no rate increase possibilities, benefits that are going to come to you on a tax-free basis. Tax-free, guaranteed long-term care insurance coverage of $500,000 for that $100,000 and $166,000 worth of life insurance. And the ability to withdraw this money if you choose because you felt you didn't need it at some later point. A very easy process of underwriting. So we're not going to hassle you through 2 months of underwriting, blood tests and exams and physical exams. We're going to ask you 8 questions. If you can answer no to those 8 questions, we're going to do a cognitive screening over the phone with you. We're not even going to send someone to your home. You know what cognitive screening means? So everyone, no? Okay, a cognitive test is a mental acuity test. Sometimes my wife questions me about that.
So do I.
It's somewhat of more of a listening issue than it is more of a cognitive issue, but yes, sir.
Yes, I have one question for you, right?
Sure.
If you put $100,000 in that, right? How will the company pay you the $166,000 and still at the same time provide that $250,000? Where would they get the money from?
I'm not sure where the 250 came from, but the
$500,000.
Oh, okay, 500?
Yeah.
Okay, well, it's not necessarily both, okay? If you're using the long-term care insurance part of the policy and you've used, let's say, $400,000 up, you've used up your benefit, then, $500,000, you've used up the benefit. You're not also going to have $166,000 of life insurance. If you, however, have not used up $166,000 or more of long-term care, there will be life insurance paid up to the $166,000. What I'm telling you is that one way or another, on that particular contract, you are guaranteed money. You're either guaranteed back your money, you're guaranteed a death benefit that's tax-free to your beneficiaries, or you're guaranteed long-term care insurance. If you've used a portion of it, as I said, the balance of the $166,000 would be paid to your beneficiaries. And actually, if you used up more than $166,000 and pass away, there's a 10% amount that still would be paid. So this sounds like a program that's beyond reasonable as far as what a company can do. And I can tell you that if you do your due diligence on Lincoln Financial, you'll find that this is one of the most reputable companies in the market, one of the older companies in the market, one of the better rated companies in the market. And they have been doing this for 20 years with great success. What they are doing differently today, and why we're talking to you about it today versus maybe 10 years ago why you didn't hear about it, is because it was too complicated for most people. The process of applying was way too complicated. The process of explaining the program was too complicated because there were a lot of variables. They based it on a current interest rate. Today it's all based on a guarantee. Everything in the contract is based on guarantees, so it's very simple for me to tell you the plan is guaranteed principal, guaranteed death benefit, guaranteed long-term care insurance. And yes, ma'am, sure.
Is there an age limit?
Yes, there is. I mentioned before that 80 would be the oldest you could purchase this plan at. If you're not beyond 80, this plan would not be workable. In fact, most long-term care insurance plans, traditional plans, there are some companies that'll go beyond 80, a few companies that'll go to 84, but most companies are no longer offering coverage beyond that. A lot of companies are only offering coverage up to age 79, and there is an underwriting process that you'd have to go through. You're 93 years old? Great.
Lucky 94.
Wow.
Wonderful. Congratulations.
Okay, so I'm not going to take much more time other than to tell you that I really appreciate being here, being one of your sponsors for today's lunch. I hope you enjoy the lunch. Greg's going to be up here also. If you have specific questions, Michael Plotnikoff in the blue shirt over here has been with my firm for many years, and Bill Sellinger over here. Both of these gentlemen are local insurance agents that work out of Plantation, our office down in Plantation. We're certainly available for you, and we'd love to be able to give you an opportunity to see which of these options, if any one of them, would be viable for you to consider. Again, we're in the business many, many years, and we appreciate being part of this community, and thank you very much for listening to me.
Thank you, Peter. I'm back. I'm like the penny that doesn't go away. As you know, that we did have some ideas here, and we talked about some of the consequences. If we had some Cash4Care come in, we could probably manage some of these consequences. Would that be a true statement? Yeah. You know, for some people, I really look at if you have coverage or you don't, there is another possibility. What if you had $153,000 worth of coverage, which doesn't sound like a lot, but let's say it's $153,000 of coverage, and it was to pay you $4,200 a month cash. You could pay anybody. How about a family member who had to give up his or her job to take care of you? Would it be fair to be able to pay them? Would that be a nice choice that you'd have the flexibility to do that? What a benefit that would be for the family, because they're not going to have to suffer a loss of income because of a situation that was developed not by your control. For somebody 70 years old as a married couple, the premium is about $23.42 a year. That is not really expensive. So what I'm saying is, one of the reasons that we have Michael here, and we have Bill, and we have Peter, is because we are Cash4Care consultants. We can certainly sit down with you and look at your own consequences with you and see what solutions that we could develop. How many of you could see the value in that? Yeah. And what I'm going to invite you to do, Michael, I'd like you to pass out, and Bill, I'd like you to pass out. We're going to pass out a form, and I'm going to invite you to at least sit down with them. Whether you buy something or you don't, that's your choice. But at least you know that you worked on, you saw the elephant in the room together, and you made some decisions. And that way you can celebrate yourself in your decision of whatever action that you took or inaction you took that you're comfortable with. Does everybody make sense? Does that make sense to everybody? Okay. I'm going to like to do one more thing, and they'll pass out a pen here. We have some pens that work today.
Yeah.
Yesterday they gave me
I
a pen
made a
that
big
didn't work. I
investment.
kept trying.
I went big time on it.
All right.
A pen? Anybody need a pen? You're welcome.
I'll take one of those.
Yeah, these are nicer. These are nicer. We upgraded today.
When we
Here's a pen. You want to see one of these? Yesterday's pens were a little dry.
before we finish, I'd like to. Would it be okay if I read you one story to close?